Good morning, good afternoon, good evening, ladies and gentlemen, wherever you're based in the world. We are the Pipoholics from London, England. My name is Levi and it's my pleasure to take you through this presentation today. We will be visiting a currency pair where we spotted a trading opportunity. Be sure to subscribe to our YouTube channel because we post these videos regular. Also, if you want to follow us on social media where we post the odd chart and update on any of the videos, the links will be found below this video. This piece of analysis is going to focus on the Great British Pound against the New Zealand dollar. Before we get into the actual analysis, if you haven't watched the video that we uploaded earlier today, there's a lot of information on there and there is a very good setup that you will like for trading for the following 2 weeks. This is quite similar. I think this is going to take a good 2 weeks to pan out, and the chart in front of you is a monthly chart, and we can clearly see that ever since this massive down movement there's a bit of a trend line here, and the market keeps pulling back, making higher highs. What we're expecting is this market to maybe come down and touch this trend line again before it goes on and makes a new high of this move. If we switch to the daily, this is something that is very simple, very simple setup. You can see that we've got a parallel channel. So we've got well-defined resistance and we had some well-defined support. It's not a perfect channel. The channel is valid, but it's been violated a few times. As you can see, the market rallied up, back tested it again, had a big up day, failed to make a high. That brought in selling and we went all the way down to the bottom of the channel. But you can clearly see top of the channel, bottom of the channel, bottom of the channel, top, bottom, top. In a down channel, we are only interested in selling at resistance. We do not want to buy at support, because what can happen is, especially in a down channel, the market can come down, you can buy it and then it just falls through. The other thing that can happen is you can test support and it can just drift down. And then before you know it, you need the market to rally a lot to put you back into profit. So we're interested in selling. And the market is right at resistance now. On Thursday it rallied, hit and then got sold off. Exactly the same thing that happened in the Euro New Zealand dollar chart is happening here as well. So what we think is going to happen is either the market will break out, we'll get probably a chance of buying on a back test, and then we'll go on and make new highs. But what I suspect will happen is the market will fail at this resistance and it will come down and give us a nice down move. If we switch to the hourly chart, because we don't want to just jump in and sell this. Some traders would. Some traders will be like, okay, we're at resistance. If we have an intraday rally, I'm going to hit it and I'm going to sell this down to Chinatown. What we would say is look at the hourly chart first, because that's where we want our entries. If you sold this market, you are basically selling against the immediate trend. You could sell and the market could break out. You've sold low and you're going to have to buy back high. What I would suggest is that you wait for the market to close below this trend line. As soon as it closes below, we know it is in the sell zone. The market is starting to show us that it is respecting this resistance, and it's showing us that maybe we will come down to test the support, which is our projection. We project if resistance holds, we will test support. How this will look like on the chart is you will get the market come down into the sell zone. So let's imagine the market falls, breaks support, we end up down here. This will be at a low price. The market will move in waves. So if we jump in selling here, there's every chance that what could happen is the market rallies. Maybe the market rallies all the way up. It gives us a false signal and it rallies all the way up, breaks resistance, and you get stopped out. Or maybe what it does is it backtests this trend line. So the market will fall and then it will start to rise. What we will do is we will draw a counter trend line. As soon as the market starts to fall again and closes on the hourly chart below that counter trend line, That is where we enter. So we get a high price in the sell zone. That is what I want you to do for this setup. That is what we will be looking to do. If this happens, there is every chance that the euro will do the same thing, because on our other video we showed you that the euro possibly will fall against the New Zealand dollar. If the pound does this, then we expect the euro to go down too. Likewise, if the pound breaks on the upside, we expect the euro to do so too. So if you are going to short the euro against the New Zealand dollar, be very careful about shorting the pound against the New Zealand dollar, because if one of your trades goes bad, they're both going to go bad. So please be careful about your position sizes, and I would recommend you only really trade one of these setups. That concludes our analysis. We will be back next weekend for another trade setup.